Oliver Slope, Blue Line Futures in Chicago. Oliver, thanks for being on.
Thanks for having me.
No problem. Anything? I mean, look, we've been talking about it all day, but does anything jump out at you there? Anything interesting when we talk about these these grain prices?
Well, yeah, I'm sure you've covered corn enough to know that it's just been a stick in the mud here, really, since July 8th, trading in a range 403 to 413. I was hoping that with yesterday's price action, testing the upper end of that range midday, that we'd be able to kind of chew through that and maybe spur a little bit of short covering. But alas, here we are, still stuck in that range and kind of testing the lower end of that in this afternoon's trade. The bright spot here today has certainly been the soybean market, at least in my eyes. November contract trading in positive territory. And not by a lot, but it was the weak link yesterday. We got some good export data on the weekly side of things. Weekly export sales, 360,000 metric tons. It's up 73% from last week and 13% above the 4-week average. So some silver linings there. We also got a flash sale, 510,000 metric tons, which is probably big enough to assume that that's China. So if China's coming back into the market, that could potentially put a little bit of a silver lining here and things to come.
Well, I'm happy to see that. But I've been beaten up so bad about these prices that I'm just hoping we just stop going down. I would take sideways for a little while, right? Because sideways is a technical correction after a few weeks. So we'll see. If you're a bull, what do you need to see?
Honestly, a sideways trade could be enough to spark some sort of relief rally, I think, especially what you're seeing in the outside markets. You're seeing equity soften up a little bit, and potentially that encourages some money flow. But a sideways trade, maybe funds get a little bored and say, hey, listen, there's other opportunity elsewhere. Let's bank what we got here on the short side and look at something maybe with a little bit more potential. Yeah,
we're gonna have to try to get those shorts are pretty comfortably numb right now, right? They're not really scared about anything, and the weather has been pretty benign. You did talk about some demand. I think I'd like to see more. Especially with these cheaper prices. We'll see.
We would all love to see more, no doubt about that. But yeah, I'm excited. The Pro Farmer Crop Tour kicks off in about a month. And so now we're going to start talking more and more about yield as we get closer and closer to that and beyond. So at least we'll have something new to talk about.
Right. We'll be able to report on those boondoggles where you guys go out and have all that fun, right? Okay, man. Stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more. Oliver Slope, Blue Line Futures in Chicago. We'll be right back after this. Bring him in for about 45 seconds here. Oliver Slope, Blue Line Futures in Chicago. What are your thoughts here, Oliver?
Well, I've got to sound like a broken record by now. We've been talking about the cattle markets having reason to rally, a good fundamental backdrop, but really unable to gain any traction, really unable to engage the spec traders like they did last fall, and that's been a big yellow caution flag. And today you're seeing that kind of slide lower as the outside markets tumble lower. And I think what's keeping the buyers at bay is really just all the headline risks out there, from the election to bird flu to a softening economy, and then we're going to be through peak demand season here before long.
Yeah, I agree with you. And then once we're through that demand, I mean, if you're a bull, what are you looking for? So you got to be careful. What we've been saying is make sure you got some protection to the downside. Thanks very much, Oliver Slope with Blue Line Futures in Chicago.